Good day, everyone. This is Stick Profits. So today I'm going to be breaking down a GBP USD trade I took yesterday. Um, I didn't plan to break it down before, but due to a follower's request to break it down, I'm going to be doing just that. This trade was shared in FX for Living's Discord to over 4.5 thousand members, 4,500 members. However, you can see this is the markup, but let's go on the charts and mark it up again. So on the charts, when the London session started yesterday, being the first week of the first day of the week. So let's say the session started here, this line, but I saw this other block, and I also saw that we have a breaker block on this zone as well, which is this orange candle. By the way, the indicator I used for to mark out my other blocks is this indicator here, simple ICT. Let me just type it out. So simple ICT order blocks and fair value gaps by Goham Khan. Yeah, so we can see this order block. We also saw a breaker block. That's um, the orange candle. So we have to drag it to the future. We can also see that inside the breaker block, we can see a fair value gap. This is a fair value gap. So the indicator helps you to mark out fair value gaps and other blocks. So you can see that. Let me just delete this other block so you can see what I'm saying. So we have a bullish breaker. The bullish breaker is a failed order block. So if you see a bearish order block that price violates, it's going to turn into a bullish breaker. And the fair value gap. Yeah. So we can see that we have a fair value gap inside a bullish breaker. To me, that's unicorn because that's what ICT used to call the fair value gap inside a breaker block. So that's a unicorn. And this unicorn is very, 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 it's a very, very important model you can use to trade because if fair value gap passed inside a breaker, that's telling you that the market makers, they are trying to, you know, protect the zone behind, below or above the bullish breaker or bearish breaker and the fair value gap. So in this case, when we have a bullish breaker and a bullish fair value gap, they are trying to protect this low right here. and they want price to continue to trend upwards. So that's why I said watching GU here for a potential long. So I wasn't I wasn't rushing, because I knew that price will always come back to rebalance this fair value gap, and then to rebalance the price. So I wasn't rushing. I knew that price is going to get there. All I just had to do was set my alert. So when price got there, let's go to the lower time frame. When price got there, we also saw that it was oversold with this oscillator that I'm using. So it was a no-brainer trade for me to get into. So I just got in there. I put stop loss below the breaker. Then what high did I target? I can't remember the high that I targeted again. Okay. So I think I targeted this. I targeted this high at first. Then when I saw that price was, continues to trend upward, I moved my target here, and ultimately I targeted this high. So that was it. So you can see that although I was stopped out, because when I got to this high and started moving my stop loss, I was stopped out at somewhere around here. So that's how I got into that trade. So it was a very successful trade. And you can see that Euro GBP USD continues to trend upwards into up until today. And I'm currently in another GBP USD short, but I won't be explaining that now. So I just want to show you another instance of the breaker and FVG trade model. You can, to know how they can, how market makers protect the highs and lows that give us the breaker. This is another USD card trade I took today. I think I also shared in the group. That was very early in the London session. Potential USD card shorts. FVGC is good liquidity void for target. So it's also the same, the same concept. When we saw that price was respecting, that was below the Asia range. When price broke through, down to the Asia range, we saw that there was a fair value gap here, and if we go to the lower time frame, you can also see that this other block here, this other block we have here, trying to find the other block we have here, it failed, so automatically it becomes a breaker block. And inside the breaker block, we saw a fair value gap here. Let me just move this apart. You can see the fair value gap there. So that confirms that price is respecting this fair value, this bearish fair value gap. Price broke down and violated this other block, making it a breaker block. And inside the breaker block, we have a fair value gap. I mean, that's unicorn for you. So you can see that when price continues to go up into the unicorn, continue to dump, go up, continues to dump, go up, continue to dump, until it got to our target, which is the consequent encroachment of this bullish fair value gap. So that was our target. That was our target, and you can see that the FVG consequent encroachment has been taken. So that's it for the model of breaker plus FVG. Once you see this on your chart, and the good thing is it repeats every day. Every day, guys, it repeats every day. You see breaker plus FVG everywhere in your charts, everywhere, in every pair. Whether you are trading crypto, you are trading forex, you are trading indices, you know, everywhere. You see it everywhere, every day by day, and it will never stop. So that's it for this lecture. I hope you understand and enjoy this kind of content. If you don't mind, you can like and subscribe to the channel so that the channel can grow. Until next time, peace.